Nvidia's market cap is more than 4 trillion. Are we on the verge of seeing the next great tech bubble, or does Nvidia still have more room to run? Nvidia is showing short-term weakness on the charts, so what now? Where does the stock go next? In this video, I'll explain whether I think the momentum is over or if it's just the beginning and some risks shareholders should be aware of. Looking at the chart, Nvidia is showing caution signs in the short term, but there are key levels I'm watching closely. There is support around $172.50 and $170. If prices fall below these, it could continue to drop toward $167.50. On the upside, resistance is appearing near $177.77 to $178.50. So far, Nvidia is trading below its 9 and 21 period exponential moving averages, which suggests short-term weakness. But if it breaks above the resistance zone, a bounce back toward $180 or higher becomes more likely. Momentum indicators shows a healthy but slightly decelerating trend. The RSI has declined from overbought conditions near 76 to the mid-50s, indicating that Nvidia remains bullish but not excessively stretched. Looking at their financial performance, Nvidia's Q2 earnings show the company's ability to capitalize on the AI infrastructure boom. Revenue reached $46.7 billion, a 56% increase year over year. This shows a strong demand from data centers and enterprise clients. Data center sales alone contributed $41.1 billion. Here is why I think Nvidia will continue to grow. Nvidia's growth trajectory is anchored by the acceleration of AI. According to CEO Jensen Huang, the company is entering the big bang of intelligence, with global AI infrastructure demand projected to scale into a $3 to $4 trillion market over the next 5 years. This surge is driven not only by the proliferation of AI applications, but also by a shift from model training to inference, where deploying AI at scale generates orders of magnitude more compute usage. For example, Microsoft's AI operations in Azure increased from 10 trillion to 100 trillion tokens processed monthly in a single year, showing huge growth in GPU demand for inference workloads. Other groups like Nebius and CoreWeave are also spending billions on Nvidia's technology. These projects show that AI is still just getting started, giving Nvidia lots of room to grow even more. Nvidia also recently teamed up with Intel to integrate AI-optimized central processing unit for data centers, enabling a more seamless AI ecosystem while expanding Nvidia's influence beyond traditional GPU deployments. While Intel and other competitors exist in the semiconductor landscape, Nvidia's dominant AI compute share, estimated at roughly 70%, positions it far ahead of any other player. Minor competitors may provide occasional pressure, but Nvidia's ecosystem lock-in and platform expertise remain unmatched. Despite its market capitalization of $4.14 trillion, Nvidia's valuation remains reasonable when accounting for expected growth. The forward PEG ratio stands at 1.06 times, compared to a sector median of 1.86 times, implying that Nvidia is trading at a 43% discount relative to peers when considering expected earnings growth. EPS could nearly double between 2026 and 2030, which would bring forward PE ratios below 20 by 2030. Historical growth supports these projections. And of course, there are risks to keep in mind. Nvidia faces competitive risks from other technology giants attempting to develop in-house AI chips. Chinese companies such as Huawei, Alibaba, and Baidu are reportedly pursuing AI chip programs, which could challenge Nvidia in certain international markets. Geopolitical tensions may also impact supply chains or global sales. Domestically, cloud providers like Microsoft, Google, and Meta are investing heavily in in-house AI infrastructure, although Nvidia's strength remains in chips rather than software. These risks are real, but are currently mitigated by Nvidia's technological leadership, ecosystem lock-in, and strong market share. From both a fundamental and technical perspective, I believe Nvidia remains a strong buy, offering significant upside potential while maintaining risk levels. Its market leadership, strategic partnerships, and continued innovation make it arguably the single most important company in AI compute today, capable of sustaining high growth for the foreseeable future. If you enjoyed my analysis of Nvidia stock, check out my other stock-related videos and make sure to subscribe for more content. Until next time, goodbye.